everybody. Thank you for attending this webinar, which is one webinar of a series of webinars that we are going to be having in connection to different topics related to Curaçao as a jurisdiction and different changes that has been occurring and different legal issues that you can take into consideration for your international business. I'm going to do a brief introduction. Then after that, we will have Emil Stevens and Bas Horstens, who are going to explain us a little bit more about the specific topic of today, which is a new territorial tax in Curaçao. So Curaçao has been a player in the financial sector for many years. Before World War II, there was already a player in connection to international structuring. For many years, Curaçao has had his legal framework basically without changes. The Curaçao legal framework is based on the Kingdom of the Netherlands, so being the Supreme Court of the Netherlands, the highest court for Curaçao. This results in providing a lot of stability for Curaçao and for international business, because also the jurisprudence and the doctrine of the Netherlands serves as a guidance for the Curaçao, in case in Curaçao there is any doubt about the application of any legislation. This is really important because of the elimination of potential risks against security to international business. The above mentioned together with the investment protection treaties basically give the international business a security and stability, because as you may know, most of the investment protection treaties signed by the Kingdom of the Netherlands include Curaçao as part of it. So any investment made by a Curaçao entity will be in principle protected by the terms of the investment protection treaties. The Curaçao corporate tax applicable today was originally introduced in 1940 and basically didn't change too much, but every 10 years or so. Now, as you know, with the BEPS initiative, there has been a lot of pressure around the world to modify and apply a different set of rules. And because of that, Curaçao has been trying to do the utmost to align the corporate tax system and other legislations in order not only to be aligned with the new requirements, but also stay competitive in the international framework. That included, of course, not only BEPS, as I mentioned, but also FATCA and CRS. All this has been in discussions with the OECD and the European Union. Because of that, the changes that has been included in Curaçao has to do with the Common Reporting Standard legislation in 2016, the tax regulation with the Netherlands 2016, country by country reporting legislation in 2018, corporate income tax in 2019. The biggest change in the corporate income tax relates to the migration from a worldwide corporate taxation into a territorial tax system. The incorporation of the increase of the subset requirements and the elimination and adaptation of certain facilities that used to be in the corporate tax. The corporate tax, like, for example, the export facility, the e-zone, etc. It is important to mention that the Curaçao tax rate, corporate tax rate, now is 22%, which is, if you compare it to the OECD members, the average, or the Latin American region, we are not in the highest level. After the incorporation of all the changes some of the changes that we're going to see today or discuss today, Curaçao has been considered largely compliant by the OECD, and also was taken out of the list of non-competitive jurisdictions of the European Union. In conclusion, Curaçao has done a great effort to be aligned with the OECD and the European requirements and to still be competitive in the International Business Center, providing a stable business environment for international business and international structuring. That is also accompanied with a network of highly trained professionals in the different areas needed to support the international business and to provide a high quality of services to support this business. So with that, I finish my introduction and I pass the word to Emil Stevens. Emil?
Thank you. I will discuss briefly first how we adapted the OECD rules in our tax system. Then I will elaborate a little bit on our substance rules. And after that, Bas will give two basic examples to show you how Curaçao can be helpful in implementing those substance rules. And after that, we will discuss a little bit more on the territorial tax system, on profit determinations and the consequences of that. We started our implementation, as the rest of the world, on July 2018. At that moment, we implemented an exemption for foreign profits, not only containing an exemption for foreign PE profits, which were already exempt under the previous laws, but also income from foreign real estate was exempt, and simply said, foreign income derived from transactions with non-residents were exempt. The E-zones the E-zone legislation was dramatically amended. It was basically only open for physical trading and storage. The export facility was completely abolished, and with respect to IP, we introduced an IP box regime, which is highly comparable with the Dutch IP box regimes and the IP box regimes in other countries of the European Union. As mentioned, we introduced substance rules to complete the whole process of implementing the BEPS rules. Basically, the OECD agreed with those new rules. However, the Code of Conduct Group of the European Union asked for further modifications. And as there was a risk that if we didn't comply with the demands or the request of the EU, that we were put on a list of non-cooperative countries. So we started 2019 with a discussion on how we could comply with the request of the European Union, and that resulted in a switch from a taxation of worldwide income to a territorial tax system for corporate income tax purposes. We were still allowed to have a preferential regime, so we created one special preferential regime with a profit tax rate of 3% for domestic industries and professions that were considered important for our economy, such as ship and aircraft maintenance, warehousing and logistics, shared services, and fund management services. And we also brought up to date our permanent establishment rules with the OECD Model Treaty, and because there were some deviations with the PE definition in the tax arrangement Netherlands, Curaçao, we also implemented these rules in the local PE rules in our profit tax ordinance. Then the substance rules. The biggest question, of course, is when do you have enough substance, and what is substance? And I cannot give you an exact answer on that. Substance is available when an entity has economic presence, either as a group or as a single entity that performs core income generating activities and also has an appropriate number of employees that are in agreement with the nature and the scope of the activities of the entity or the group of entities. You also must have returning local operational expenses that are in agreement with the nature and the scope of the activities you perform. And as per January the 1st, 2020, for those companies who use the territorial tax system, that is, companies that don't have domestic income, you must make a PE comparison. That comes to it that you have to compare your activities with a foreign company that performs activities through a PE in Curaçao. The core income generating activities in which the definition refers to are the same activities as defined in the OECD report of harmful tax practices in 2017. And we come to that in the next sheet. What is important is the relative substance, meaning that size and the scope of the activities are important factors, meaning that the larger your activities are, or the larger the scope of the activities are, the more substance is required. In order to help you build the substance, we introduced by ministerial decree some safe harbor rules or some guidelines, which were the same guidelines as the Dutch have in their profit tax ordinance and in their dividend withholding tax ordinance. However, we withdrew these a year later because it was considered that the legal definition in our profit tax ordinance should be enough to build your substance. However, unofficially, most use those rules still as a reference to substantiate your substance, though on an informal basis. Companies that don't comply with the substance rules are eligible for a penalty ranging from 50,000 guilders to 500,000 guilders, which is about $28,000 to $280,000. However, the foreign profits remain exempt. And with respect to the territorial system, I remarked that whether there is sufficient substance or not must be assessed by entity and not per group. Then the question remains is, when do you have sufficient substance? Now, luckily enough, our Dutch Supreme Court, which is also our highest court of instance for tax laws, gives some indications. In 2018, the court ruled that at least the key functions and the strategic decisions must be taken in the country of residence, in this case, Curaçao. Furthermore, the knowledge of your directors should reach further than the knowledge that is required for the day-to-day administration.
Emil, for interrupting. There is a phone that is ringing. So if you have a phone, sorry for that, but it is interrupting what you are saying to the audience. Sorry, go ahead.
Yeah, I know. I've already put it off. As I said, is that at least key functions and strategic decisions must be taken in Curaçao. And the knowledge of your directors must reach further than the knowledge you need for day-to-day administrative tasks. The responsibilities of your directors must at least include the legal completion of transactions, the handling and managing of agreements, the handling and managing the risks associated with those agreements, and of course execution of transactions. All directors should have professional knowledge required to perform these tasks. And tasks may of course be outsourced. For example, you may hire lawyers, you may hire tax lawyers, accountants, financial experts, etc. However, the authority to make the decisions must be kept by the directors, and the directors must be able to supervise and execute their tasks. They must be able to give instructions to those employees or third parties. Furthermore, it's important that if you have foreign board members on board, is that the decisions are not allowed to be prepared abroad and just taken in Curaçao. No, the whole decision-making process must be here in Curaçao, and the decision must finally be taken by the board here in Curaçao. As mentioned, the definition, our substance definition, refers to the core income generating activities in the OECD report. And the OECD mentions a number of activities and functions that should be filled in with that. For example, distribution activities that must contain taking care of your storage, your transport, your stock control, execution of orders that are coming in. With respect to finance and lease, you must be able to negotiate your funding terms, you negotiate loan agreements with banks if you need money, if you need extra funding. You must manage the finance risks, and even identifying the assets that are going to be leased should be included. A very important activity for Curaçao are the activities of holding companies. Holding and managing of your equity participation, being involved in management, and the policy and the finance of your equity participation should be done from Curaçao. Fund management, for example, with respect to acquiring, selling and holding investments, managing risks, managing currency risk, taking hedging positions, decisions on taking hedging positions, preparing regulatory reports for the central bank, preparing investor reports for your investors in the fund. All those activities could be available here. Banking, it seems logical, providing loans, financial services, raising funds, managing your risks, managing currency risk. And with respect to insurance activities, of course, not only insuring the risk, but also calculating and predicting the risk you are going to insure. Once identified the activities, you can identify which persons you need to fill in all those functions that need to be available for your activities here in Curaçao. Juan, I'll give it back to you.
So I have a couple of questions here, and I assume, Emil, that the substance is not something that you, let's say, comply with in a specific moments, and that's it. It's on an ongoing basis. So, for example, if you have a director, local director, and for whatever reason the director is not, the position is vacant, for example, for let's say 3 months, that doesn't mean that you are not fulfilling the substance requirement as long as you fulfill the position and there is a new director, right?
No, I mean, substance must be available on a continuous basis and must be measured on a continual basis. For example, your absence of a director can be caused by all kinds of circumstances, either a change, either sickness, or he needs to be elsewhere because of his expertise. Anyway, from my point of view, substance should be measured on a continuous basis. So it means that in your example, that if an employee is not available for a short period of time, that shouldn't have consequences for your substance here in Curaçao.
Could you give a bit of explanation about what is the definition of the PE in the new rules?
To be short, I mean, basically you have a permanent establishment available when you're operating from a fixed place of business. And of course, there's more to that because your activities must then constitute a PE. If you, for example, have an office here in Curaçao but are only giving information, then of course you don't have a permanent establishment. Or you have a warehouse here for just showing the goods, but don't sell or anything else. Then you don't have a permanent establishment here in Curaçao. But you have to be careful. I mean, we have seen in the past in case law that even hotel rooms can be considered a fixed place of business, and that also counts for temporary apartments or anything else. We saw, of course, at the beginning of the COVID crisis that the OECD was very quick in issuing a statement that because of the COVID crisis and people got stuck in other countries, that for the time being, that shouldn't be considered a permanent establishment for the company. But I mean, there was, of course, a risk in that.
It's not that difficult to, let's say, fulfill the requirements or the requirements to have a PE in Curaçao, right?
Oh yeah, you should start, of course, with a fixed place of business, and then you make a functional analysis on what functions you need to fill in here in Curaçao to perform your activities. For example, if you want to start a bank, then you start with an office. You start with the license of the central bank, and then you start analyzing what do I need to operate as a bank here. And that means you need loan officers, you need people who are managing the risk, people who are eligible for have experience in banking and all kinds of things. But you still need to make the same crucial analysis that is basically made in transfer pricing issues also.
Okay, thank you, Emil. With that, we pass the word to Bas, which is going to give us a little bit more an explanation, but from a more practical point of view. Bas?
Thanks, Juan. Thanks, Emil. As indicated, we will show two examples to give a bit of guidance on what we consider to be both considerations and sufficient substance. But before we go into them, well, one example is the one on the screen, a straightforward holding situation, and the next one will be that of a family office situation. But before I go into that, just a few remarks of a general nature, a bit of a personal remarks as to the issue of substance. As indicated by Emil and has become clear, substance is on a sliding scale. Substance is, in my view, not a service per se. It should not be considered an element per se. It either is or is not available within a structure. That's the good part. The challenge is, of course, it's a sliding substance. It goes in line with the underlying activity. It should be considered as such, and it should be ingrained in the structure as such. The good news is that Curaçao, as Juan indicated, has a history of over 70 years.
Bas is disconnected. Sorry for that, everybody, but you know, in this world of technology.
Sorry, guys.
Don't worry. Go ahead.
I can blame it on Flow, UTS, anyone. Yeah.
Well, it will be in live, then something else could happen.
That's it.
So
That's it. Thank you. Like I said, it's a sliding scale. The good news is Curaçao has a history of over 70 years in structuring. It's starting off with the transfers of seed, having a booming industry in holding structures, later on financing structures under the US-Dutch treaty extended to the Antilles, and then a significant fund administration and management business. So On the back of those waves, the jurisdiction has developed a solid infrastructure to service this type of business, and as such, it has a deep pool of available substance expertise. And this goes in different strategies, asset classes, underlying activities, etc. So the additional good news there is that in developing the rules and regulations, as indicated by Emil, instead of opting for a fixed set of requirements to meet substance, the legislator has opted to develop a flexible, a very pragmatic and proportional system, meaning it's a case-by-case decision, and it's a case-by-case consideration what should be considered local mine management and substance. And that's, at the same time, to some extent, a challenge, primarily because ultimately the decision on whether substance is or is not is partially or largely up to the host country of the counterparty, be that a parent company, a sister company, a contracting party. The host country of the counterparty is ultimately a co-worker in this decision. So it pays, and it is recommendable to be on the safe side of this discussion, and to make sure that substance is part of any structuring right from the get-go, from the moment you decide as an entrepreneur, an investor, a client, to set up and to structure using Curaçao as a jurisdiction. It pays, and it's highly advisable to do so from the get-go, with the incorporation, the rules and regulations being part of the structure. Now, going to the examples. The first one is a very straightforward example where a holding entity set up in Curaçao acts as a parent company of an underlying active structure anywhere in the world. In this case, we chose Latin America. This is a holding company considered to be an active one, i.e. not a passive asset holding entity, which will be part of the next example. This is a holding entity that may or may not use the participation exemption on foreign profits, and that will have an active role in the underlying business. As indicated by Emil, that entity will have to reflect, in terms of substance, what the structure is about. What does the underlying entity dedicate itself to, and what expertise is going to reflect that equity activity on the holding level. In our view, that starts with a proper set of governance rules, meaning setting as from the get-go and in the bylaws of the company, as well as in additional rules and regulations, policies and procedures, setting the framework for board meetings, shareholder meetings, and all the reporting cycles to allow data to come up, reporting on data to come up to the holding entity, and for the holding entity and board to be able to perform its analysis and report further onward to the stakeholders, meaning direct shareholders, creditors, tax authorities, and regulators. In that, the role of the board is completely independent. There should, as Emil indicated, not be an external preparation with a local rubber stamp. This should be a key and core activity of the board locally. Otherwise, it would not be able to perform its reporting, both the reporting upstream and analysis of data, and its reporting onward to the stakeholders in a meaningful way. That includes contract management on the underlying equity activity, whether that's say trading and manufacturing or another type of activity. Contract management between the holding entity and the subsidiaries will have to be part of the activity and the minuting and reporting of the local board. The next example is a family office structure where we consider Curaçao to be an excellent jurisdiction to establish family office type structures, private office, family trusts, however you want to call them, because of different reasons. First of all, the solid jurisdiction and the stability of the jurisdiction. But now, in addition, the substance requirements, having the flexibility or offering the flexibility to own and operate underlying activities of different kind. In this example, we've used 3 types of assets, 3 strategies, one being a passive asset portfolio or a financial instrument portfolio. This is the holding entity with exemption, as opposed to the former example. This entity would be considered a passive asset holding company, and in doing so, the activity is considered by definition to be local, but by definition, it will also have to have the relatively limited but specific expertise to fill in the substance. And in our opinion, that means having oversight on the underlying asset management, either as a oversight on the asset management as such, or acting upon investment advice contracted by the local entity. It doesn't mean, as you may conclude, it doesn't mean all the expertise will have to sit with the board, but the board will have to be able to judge and take action on underlying investment mandates, be they asset management or investment advice. The second class of assets would be real estate in this example. Family offices or high net worth families often have direct investments in real estate, commercial real estate, private leases. Those, as opposed to a fund investment that invests in real estate, that will be considered passive. In this case, we're using the example of a direct investment in an operating and an income producing real estate. That can be anywhere in the world. Income, by definition, will be international because of the location of the real estate. However, the board will have to have oversight over the underlying asset management, being in many cases, the case of real estate, it would be property management, as in maintenance and reporting on the performance of the underlying real estate in its income generation. That's a level of oversight that the board will have to either have, well, we would recommend to have it in-house or contracted in locally. The third asset class would be, in this example, a holding of a Dutch holding BV with underlying active operating entities. There, the level of substance on the holding entity will have to reflect the underlying equity activity. In other words, reflect expertise on the active operating companies underneath. To the extent and provided that substance test passes, the tax arrangement for Curaçao in the Netherlands provides for a zero tax on withholding tax on upstreaming dividends. So this could be will be a very interesting tool, again, provided the substance passes the test on the holding level. I think, having said that, I would have only one final remark in this. As you may have concluded from these examples, and also especially from the background as provided by Emile, all of this has a high degree of don't try this at home, which means, in our recommendation, it would be very, very advisable from the very beginning, when structuring, when setting up an entity, when putting in place the governance structure, when deciding on allocating expertise, it pays and is highly advisable to hire advisors, both on the legal and tax side, when structuring and making sure that this is put in place in a completely professional way. Thanks.
Yeah, I would like to add, in the last example, Bas, is that I would like to stress out is that, for example, your foreign entities, countries and tax authorities of foreign entities could influence the scope of your substance here in Curaçao. We discussed you discussed the tax arrangement of the kingdom, but for example, the Dutch Dividend Withholding Tax Act also has a number of substance rules in order to reduce your withholding tax to 0%. So that could influence your substance in your holding and could make it heavier or lighter, depending on the country.
Yeah, thank you. Indeed, a valuable point. It underscores the fact that substance is indeed it's a discussion and ultimately a test and a decision that depends on multiple factors, including authorities that are external to our jurisdiction, which stresses the fact that when structuring and organizing the governance, you have to make sure to be on the fully compliant, substantial, safe side.
Explanation, so we can conclude that, and also in connection to what Emil mentioned, that the substance is relative. In the first example, we saw that it's one holding entity with one subsidiary, and in the second example, we have the holding entity holding different type of entities, even operating 8 companies through the Dutch BV. So in that case, we can say that the level of substance might be totally different one from the other in terms of the resources, etc.
Yeah, absolutely. It will the expertise and involvement on the holding level will have to reflect whatever happens in the structure downstream. It all starts, however, and one thing that I can't stress enough is that, and that Emil has already indicated, legal finality and decision making will have to rest with the board. That means underlying contracting, whether on direct investments or contracting external expertise, because it's not a requirement to have a full 100% knowledge on every single aspect on the level of the board. The board can decide to insource some of that expertise, but it will have to have the final say on the contracting terms and decision making.
But correct me if I'm wrong, the important part is that always the directors have the final say and is supervising the activities that are being outsourced.
Yes, yeah, exactly. And in that, the governance structure of the entity can reflect that. And this can range from a single director holding activity to a two-tier executive and non-executive board level, depending on the underlying activity. And that those board levels can reflect different expertises, of course.
Well, with that, we can continue and pass the word back to Emil, which is going to give a little bit more sample how the territorial system works, how the territorial profit is calculated. Emil?
Yes, thank you, Juan. We're going to talk a little bit more about the territorial tax system we have. What we basically did, simply said, we added the word domestic to our definition of profits. We abolished all the foreign profit exemption rules that were introduced in 2018. We made sure that expenses with respect to foreign profits were no longer deductible. Same for foreign taxes, unless they refer to the domestic part of it. And that was, simply speaking, what has happened. However, we also introduced a number of anti-abuse measures. The important one is that passive income, such as passive dividend income, passive interest income, royalty income, and passive rental income, are always considered domestic profits. So that will always be taxed at 22%. With one exception, and that is, of course, we still have the participation exemption rules in our profit tax. And passive dividend income will only be taxed if you meet the anti-abuse measures in the participation exemption rules. Now, participation exemption is applicable when you have at least 5% of the nominal paid in capital, or if you have less than 5%, but you have paid a cost price for your shares of about $500,000, then you also qualify for the participation exemption rules. The anti-abuse measures are cumulative demands. So if you don't meet the activity test and you don't meet the subject to tax test in the participation exemption, then your dividend is considered a passive dividend, and then it will be effectively taxed at 10%. For royalty income, it's only facilitated if the IP box is applicable, and even royalty income earned by a Curaçao investment company is subject to 22% unless the IP box is applicable. The extra substance rules for the PE comparison we have already discussed. There is no definition of what is a domestic profit or what is a foreign profit. The explanatory notes state that it's amongst others income derived from commercial, industrial, innovative and similar activities, as well as activities originating from an enterprise or profession conducted or performed in Curaçao. Then the matter of profit determination. It's not decisive where the place of the customer is. We saw that in 2019, which is a relatively strange in-between year, is that profits derived from transactions with non-residents qualified for the foreign income exemption rule, but that is no longer the case except for banking and finance institutions. The ratio between the local direct expenses and the foreign direct expenses that have a causal connection with your turnover, you realize, are decisive elements. You may, or you may not, it's obligated that materials that are included in your product may be excluded, and your management expenses, that is a matter of case-by-case evaluation whether or not they are generating turnover, and whether that has a causal connection with their expenses have a causal connection with the turnover generated. Examples of direct expenses are, for example, salary expenses, depreciation expenses, finance expenses for machineries you use, software that is used by professionals, etc. You will probably see that in tax audits in the future will probably give a rise in a discussion on your allocation of your direct expenses to your domestic activities and your foreign activities. I think that a good substantiation and even upfront negotiations with the tax authorities would help, or at least determine which functions you have in your company, and based on a functional analysis, determine which part of the expenses you have for these activities can be allocated to foreign activities and your domestic activities. The location where your functions are performed can be of importance. For example, technical services. For example, if you have repair services at the location of your client, that would probably add to your direct expenses for your foreign profit determination. And beware, you as a taxpayer has the burden of proof that profits are not taxable. Then quickly walking through a number of examples. The first example is for many of us here in Curacao, maybe outside Curacao, very recognizable. We have an NV here in Curacao that buys products from a manufacturer in country X and sells it to customers in country Y. The manufacturer ships, in this example, the goods directly to the customers in country Y. And here in Curacao, of course, we have an office, we have salaries, we have telephone expenses, utility expenses, and that are basically our cost. We have no warehousing because everything is shipped directly from the manufacturer to the client. Logistic expenses are directly charged to the client. This simple example. Purchase price of the goods in this example is 100, sales price 200. We have our local expenses, which are 50, so we end up with a profit of 50. Now, if we don't have any special regimes, then that under worldwide system, the 50 would be taxed at 22%. And if you take a look at our former preferential regimes, those the 50 could either be taxed at 2% or 3%, depending on your applicable regime in those years. Under the territorial tax regime, the 50 would probably considered as domestic income and fully taxed against 22%. And why? Because all the work is performed from Curaçao. We've seen in the definition that businesses work performed, and I'll, if I can focus back a little bit, you see that professions, enterprise or professions conducted or performed from Curaçao. So in this example, everything you do is performed in Curaçao, and that's why the reason why it's taxed as a domestic profit. And this comes close to the system they use in Hong Kong too. Is that if everything happens from your office location or your location where you operate, then you just have a domestic profit. Now let's go to example 2. In example 2, it's the same company, but in this case, he has a number of sales representatives, and those sales representatives visit clients in other countries around 60% of their time. We have a managing director who supervises and purchases sales, administers the sales for about 40% of his time. We have a turnover of 2,000, purchase price of 1,100, expenses for the sales persons, including travel expenses, 300, promotional expenses abroad, 100. We have some logistic expenses in this example, the expenses of the director and our office expenses. That all leads to a profit of 185. If you take a look at the allocation, we have said that 60% of the sales representatives' time are spent abroad. So of the 300, 180 is expected to be foreign direct expenses. The logistic expenses and the promotional expenses are also direct foreign expenses in this example, so we add up to 317. The time, the 40% time that is spent here by the sales representatives are considered domestic expenses. and the 40% time of the director, 60, is also considered a direct expense, but domestic. So that's 180, so your total causal expenses are 550. Now, if you take a look at your profit determination, then your domestic profit is the 180 domestic causal expenses divided by the total causal expenses of 550 multiplied by your profit of 185 gives us a domestic profit of 61 and a profit tax of 13.4. Now, compared with the system worldwide taxation of income without any preferential regimes, you see that the tax would have been 40.7. If you would have performed this under the former export regime, you have a tax of about 5.6. If you take a look at the effective tax rate under the territorial tax system, it's 7.2. So a company like this could create a huge benefit and a huge tax savings by conducting its activities from Curaçao. Third example is cross-border services. In this case, it's an example of an IT company. You have, again, the sales director who supervises the purchases, sales and administration for 40% of his time, and he is 15% of his time abroad for foreign acquisitions. You have the IT director who is responsible for development and implementation, on which he spends 60% of his time, and 20% of his time he is abroad with the clients implementing the IT systems. We have a turnover of 5,000. We have purchase price for 2,000 on applications that are being used by the clients. We have the sales of the technicians, 1,000. We have some promotion expenses, again, 100. The expenses of the IT director and the commercial director, 250 each. We have office expenses, 150, leading to a total profit of 1,250. Again, based on the analysis we've made, we see that the salespersons are part of their time 30% abroad, which leads to 300, and the remaining time they are working out of the office online with their clients. The IT director, again, 60% spending abroad, and the remaining time he is in the office. Commercial director, same. So that ends up with direct foreign causal expenses of 487.5, domestic causal expenses of 950, a total of 1,437. The profit, the domestic profit in this case, are the total direct domestic profits divided by the total direct expenses, multiplied by 1,250. The profit, the overall profit, gives us a domestic profit of 826, and a profit tax in Curaçao of 182. Taxation under taxation system of worldwide income would have led to a taxation of 275 without taking into account any former preferential regimes that could have been used. And we see that the effective tax rate under the territorial regime is around 14.5%, which gives us tax savings in this case, this example, of 93. What we didn't discuss in the distribution example are, for example, warehousing activities that are conducted here in Curaçao. The warehousing function could be taxed in I think in two different ways. It could be under the preferential regime of warehousing and logistics, where you would pay 3% on your profits. But you could also see it as if it is in your own hands, in your own company. You could also see it as auxiliary to your sales activities. And in that case, you should somehow, through a separate entity approach, maybe determine your warehousing and logistic activities and results, and that should be compensated by your sales function, either on a cost-plus basis or on the basis of the EBIT of your warehousing and logistic activities. So that would probably add a little bit on your domestic profit. The special regime, we've discussed it briefly. Well, I think ship and aircraft is logical. We have aircraft, I don't know, but we have a large ship repair industry here in Curaçao. Warehousing and logistics forms a large part of our business in the local harbor, and always very important for us in the past and hopefully also in the future are shared services. However, you need to be aware that you can only use the special regime for shared services if the complete group turnover is at least $28 million. Examples of shared services: customer support, group editing, group IT, for example, legal, transfer pricing, that all could be considered as examples of shared services. And of course, very important also under the special regime are all kinds of fund management services we provide from Curaçao, not only fund administrations, but every kind of service that supports the fund managers. Maybe Bas can elaborate a little bit on that, because it's more his field of work than mine.
Yeah, happy to give a few remarks there. I mean, fund administration, fund management service, well, basically has two main lines of reporting and stakeholders, other than the principals and the regular stakeholders. First of all, a fund is a pooled investment, of course, for a variety of financial investors that have only one interest, which is economical. All they need is a decent and reliable reporting, and increasingly that is IT driven. In addition, a fund will have to meet its regulatory and management reporting requirements for to retain its status and make sure that it complies with primarily the local regulations. In that sense, we would split the if requested to assist on fund management, we would dedicate resources to the regulatory and tax reporting and the financial reporting to investors. However, as with the passive investment company, issues related to investment advice, investment management, decisions on asset allocation would be better served by either the principal, or an external asset manager. So that expertise we would insource. But most of the infrastructure surrounding a fund and its financial reporting can be serviced and should be serviced.
Yeah, and it goes without saying that for each of the activities under the special regime, is that the substance demands must be met. So if you have, if you want to do group editing, it's not setting up a company here and then outsourcing your group auditing to all kinds of people abroad. No, your group editing should be based here. And so that goes without saying. For ship and aircraft repair, that seems more logical. That's basically it. I mean, as mentioned, tax rate is in the special services is 3%. So that seems reasonable for these kinds of activities that are indeed very important for our local economy.
Maybe one short addition on the. We've seen recently an increased interest by Latin American families to structure their assets in a family fund, not just to service the family members, but also to attract external investors, both institutional and private investors in that activity. This, against a wider context of what we've been discussing over the past hour, I think underscores or depicts the attraction of Curacao as an establishment, as a place of establishment for international investment activity. We tend to forget, between all the technical issues that we've discussed, the bottom line is that by having a territorial tax system combined with the proportional substance requirements, the depth of the infrastructure that is available in Curacao and its political stability now makes it a fully compliant and a very attractive place, even more so than in the past, to do business. And I think my personal opinion is that with the OECD and EU rules and regulations that we've been seeing presented over the last, I would say, 10 years, but even longer, this business is increasingly becoming mainstream and available to a wider audience. And in that sense, I think that wider market, combined with the facilities that we've discussed now, make Curaçao an extremely attractive place to set up shop as an investor or a wealthy family or an international entrepreneur. I just wanted to mention that to avoid that message getting lost in all the technical.
Thank you, Bas. Well, with that, we have, let's say, finished the presentation itself. We have some questions here from the audience. So I think I'm going to put it to you, and whoever you feel is better to answer, or both of you can answer, that's okay. The one question is, if does a director needs a license from the central bank to be a director of a local company, as a trust, let's say, company or trust fiduciary service provider needs? That's one of the questions. I assume that is asking if somebody that is going to be a director has to be, let's say, pre-approved by the central bank.
The answer is yes. The central bank requires the director's license to provide these services to international structures. There is a regime of exemptions too for personal directorships that is not formally limited in numbers of directorships, but there is a de facto limitation as to the number from a regulatory perspective, but also from a substance perspective. So yes, there is a license requirement. Yes, there is an exemption opportunity, but it's limited in numbers.
Yeah, Emil, in connection to you mentioned about the substance and the direct, the importance of the direct expenses and the classification, and you mentioned that you could talk to the tax authorities. So it is possible to obtain a ruling in advance once you sit down with the tax authorities and explain how you're going to divide what is direct and indirect, and what is direct local expenses and international direct expenses, and also, let's say, show to them what you are doing as a substance,
I would even recommend it because I mean it's as said, you can expect discussions in tax audit on the allocation of your direct expenses, and I would certainly for larger companies try to avoid this to at least determine your describe your direct expenses and agree upon on the allocation percentage. Of course, the expenses may fluctuate on a yearly basis, but at least, like in transfer pricing, establish the basis of the percentage of allocation which can be renewed every 3 or 4 years. I mean, that seems to me also giving the client a little bit of comfort, as it could take a while before tax audits are processed or even conducted here in Curaçao.
You mentioned the participation exemption still applies, but do you need substance?
Well, do you need substance? Yeah, yes and no. I mean, before we had the substance rules, we already had, of course, that we created limited substance in the holding companies to avoid that participation exemption rules were denied, or that the participation was considered as holding as a portfolio. So, yes, I would definitely create a minimum set of substance, and even from foreign withholding tax options, you could see that foreign tax authorities and foreign laws demand a relative substance in holding companies.
Was mentioned before, is not only the local substance, but also you need to see which
it's cross-border.
Which country are you dealing with to see what are their requirements of substance for the holding company.
Exactly, but basically for everything. I mean, it is maybe countries have CIFC legislation which can be avoided if there's a limited, at least a limited substance. So you have to apply it, and what is sufficient for local Curaçao tax purposes doesn't have to be sufficient for foreign tax purposes. So you have to be aware on that.
There's a question about if it is still possible to outsource activities and still be complying with the substance requirement.
Yes, you may outsource activities, but you have to be aware that you must be able to supervise and manage those persons who perform that work for you. In other words, when they perform their work for you or supply you with information, that must be information which you can handle, which you can manage, and based upon which you can make your decisions. But of course, I mean, for example, if you have legal issues, yeah, you can outsource that to lawyers. But in the end of the day, if the lawyer asks you whether or not we go to trial or not, you must be able to make the decision on the basis of the information he has supplied to you, whether it's worth to go to trial or not, for example.
I think it's very important, which is if there was any interruption or effect, if Curaçao and the financial service sector was affected by COVID-19. I think that they refer about the continuance in providing the service. That's what I assume.
Well, I think that most of us worked from home as good as it was possible. Was the financial sector hurt? Yes, it was hurt because foreign companies and local companies were hurt. I mean, if a client of mine his turnover has dropped for more than 50%, and it hurts him and it hurts me too. So in that sense, yes, the sector was affected, and of course, what you see is that investment decisions were postponed. But if I take a look at December the 3rd, we see a slow recovery. We see slowly foreign investors picking up their projects, real estate projects, hotel projects that are on the way. So it's picking up. It's picking up, but it will take time.
Yeah, but I mean,
like every other company.
yeah, sorry, but I mean, from the point of view of continuance, correct me if I'm wrong, there has not been any interruption for the service, the support.
No.
To the,
maybe I can confirm
yeah,
on
I
that.
think about you.
Yeah, on that part, from an operational perspective, in the mandates, either directorships, administration, reporting mandates, we have not had any significant interruption because of it. Most providers have redundancy systems and are fully online already, and many have been able to move to home working situations in a few days. So from an operational perspective, there has not been a significant interruption. But like Emil said, I do think the markets as a whole are suffering and may still suffer in the next few months. Well, most likely they will.
Question is if there will be any, why you will choose to have a MB instead of a private foundation or vice versa as a holding?
I think that depends on your actual situation. If you have, for example, a private foundation and you are a resident in the Netherlands, and you have your operational companies under the private foundation, then you have to be aware that dividends are directly taxed in the hands of the shareholder because of the Dutch legislation. Whereas if you do it through an intermediary holding, then at least the money, the dividends distributed to your holding are subject to tax or subject to a participation exemption on the level of the holding, but not yet taxed in the hands of the shareholder. So you can postpone the taxation on that. But it depends, I think, for every country has its own set of rules. And then for maybe for Latin American countries it works. Depending, may also depends on how the foundation is treated in tax treaties, whether it's eligible for treaty protection or not. These kinds of questions pop up. Yes. You see, of course, that especially in the EU, the world is getting complicated. Introduction of withholding tax on interests to countries and entities like foundations as direct holders of receivables or other assets could make it difficult, but it depends on the country. Any other questions?
Juan, you're on mute.
If a company in Curaçao is a holding of shares in the EU, for example, and the only shareholder is actually in Latin America. So the question is, and the shareholder doesn't come to Curaçao. If the question is if based on substance rule or requirements, the local director in Curaçao is the one taking the decisions, for example, to sell the shares. I think that we already mentioned that through the presentation a little bit, but I think somebody wants to.
Yeah, and basically the director must be able to work independently, and if it's in the interest of the shareholder to sell the company, then you might be able to make that decision. However, normally you see, of course, that the directors and such important members as alienation of your investment is done in the shareholders meeting, where the proposal to eliminate is brought to vote. And if the shareholder agrees, then the local directors can enter into the negotiation of selling the participation.
Yeah, well, with that, we have a few questions more, but I think that we got to the time that we, let's say, expected to have for this webinar. We hope that, thank you, Emil, and thank you, Vas, for your presentation. We hope that this has been of your interest and add some clarification about what the new system is, how it works, and what will be the important elements that you need to take into consideration now on when you are doing or structuring business through Curaçao. So thank you very much and welcome. Yeah.
May I make one remark?
Yeah, sure.
Would it be, you mentioned that there are a number of outstanding questions. May I suggest that those questions will be forwarded, and then we can see to it that they will be answered by email to those
Sure.
questions.
The presentation also will be shared with everybody, so the attendees will have it. And of course, it's more than clear to say that all the speakers are willing to take your answers and respond them, for sure. So thank you again.
Thank you.
Expect that you could be attending to the next webinars.